Hello everyone, this is Ming Jong. Welcome to another episode of the daily market analysis for the S&P 500 E-minutes futures for the session of 15th of October. So in this video, I will be sharing the market recap from yesterday and also a trade review in a 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. And most importantly, in the trade review section, I'll be explaining in detail how to actually trade a pullback in 3 steps, and that will help to increase your winning rate. So do watch out for that. And going forward, I will also cover my bias, the key levels that I'm watching, and also the trading plan for the session later. Alright, so let's get started. Okay, so we can see that yesterday, as shown in this daily chart for the S&P 500, was another bearish day. So right after we have seen this climatic up move, hit the channel overbought and hitting the supply zone, and we are still having this correction at the moment. So I just view this current pullback or correction or retracement as a test of this up move. So this up move actually just break out from around this little up sloping range. So that's the 1, 2, 3, 4 up candle. So as an upswing, and currently we are having a pullback as a test of this prior upswing. So far, we have seen the increasing of the supply, but it's not very threatening at the moment, because if you compare it to somewhere around the sell-off in September, or even somewhere around in the second leg sell-off, the supply is relatively low. But still, we have a local increasing of the supply if we compare it to the past few days. So definitely is still in the correction mode. So let me get down to the hourly time frame and let's talk more on what's happening for yesterday's session. So you can see that yesterday, just prior to the US session, so that's the 9:30 p.m. at my time zone, so we have seen kind of a trading range. So we have a very weak rally up and tested the downtrend line and unable to commit above, have a failure, and subsequently we have another attempt to rally, hit the downtrend line again, and have another failure. So far, the progress to the downside is not very significant, despite that we have an increasing of the supply level, which is still a concern. But overall, we are still traveling, I think, within this down channel, or maybe just slightly break through that. So you can see that this is still a down channel. And another thing to watch out is definitely this immediate demand line from this up channel here. So that's the somewhere around 34.50. So that's in line with the horizontal support and also this demand line from this up channel here. So right now we are approaching the support, and let's see what happens next and whether it will just bounce up from here. Alright, I'll explain a bit more in the current market condition in the later part of the video. So let me just get down to the 3 minutes time frame, and let me just explain a bit more on how I actually trade a pullback in 3 steps. So if you can master the 3 steps, I'm sure that it will help to increase your winning rate. Alright, so before I do that, let me give you a bit of the context, because I would like to use yesterday's trade as an example when I walk you through how to actually trade the pullback. So you can see that just I have kind of marked up some of the lines or levels here. So a few things that I am watching every day definitely is the previous day high and also previous day low. So you can see that it's marked up annotated with this orange line, and also the non-RTH high as noted as this dotted line, and also the non-RTH low as well that formed during the glowback session. So that's pretty much the level that I was watching for yesterday. And also apart from that, definitely some of the immediate structures in the higher levels. So far we have one level at about 34.80 or 90. That's the H1 hourly time frame support level. But there's nothing to do regarding to my entry when I trading the pullback. So you can see that my pullback entry actually starts somewhere around 35.05. So if you just use the day high and day low as a benchmark or as a range, it's kind of in the middle of nowhere. So usually I don't really prefer to take this kind of trade because it's just happened in the middle of nowhere, in the middle of the range. So you know that inside of a range is quite hard or not in our favor to trade, especially in the middle of the range. So if inside the range, the preferred strategy is always to trade near the high or just long near the low. So buy low, sell high, or sell high, buy the low. So that's the pretty simple strategy when we do range trading. But in this case, it's a bit different. So I want you to pay attention to the context. So the first step in trading pullback is always to find a dominating trend. So because we need to find a dominating trend in order to trade a pullback, because the pullback is actually a counter trend of the current dominating trend, and we would just like to trade at the end of the pullback. So when the pullback is finished, then we just enter a trade, and that's another start of another swing. So in short, we always want to determine the dominating trend. So in this case, first step, I want to determine the dominating trend. So what's the dominating trend at the moment? So if you just look at the larger picture, for example, within the day high and day low, I think it's quite obvious. We are in the middle of nowhere, and the trend or the dominating trend is kind of like ranging. So it's a ranging market. So in this case, it's a bit tricky. So this might not be the textbook style example, but I would just like to show you that do not always trust the textbook example, because in real life trading, you always encounter the non-textbook example. So here's one. So when I analyze the trade, even using the simple swing high, swing low, I'm sure that you can recognize that this is a uptrend or an up channel. But one thing that caught my attention is definitely the downtrend line. So we have the downtrend line that's marked up. So you can see that the downtrend line actually get tested several times. So that's the first time, second time rejection, and that's the third time. So we know that the downtrend line is still in play, and I think it could be a good benchmark. So when the price approaching the downtrend line, it just reacted and have some kind of the rejection. So here comes a rejection, temporary commit, and then followed by a rejection, and then followed by another downswing. And I did not really take this kind of trade, but what I want to see is actually to determine the dominating trend. So here is the trend. So this is a clear sign of weakness to me. So I spotted a weakness. So in short, my buyer switched it to the bearish side right after this swing down. And why did I say that? Because first of all, that's the context. There's a rejection from the downtrend line, and subsequently I see that the supply increasing when we have this downswing. And third, if we compare it to the prior downswing, this is the largest downswing. If we just talk about this context, so this is how I base my thesis on. So especially when we see the increasing of the supply, then with this kind of down move, I just want to first establish my bias. So I'm in a bear camp at the moment, because the increasing of the supply together with the downswing just switch my bias to the bearish camp. And subsequently, the second step is also quite important. So when we think about the pullback, how much should the pullback be? Like how far should the pullback reach? So this is kind of like 100%. If you think a pullback should reach about, I don't know, 10%, 20%, 30%, or 40%, I mean, it doesn't really matter, but to me, I really want to see a weak rally up, so that actually confirm that this is the dominating trend. So we want to see some kind of a impulsive trend with the corrective up move. So this is the impulsive downtrend, and actually this up move doesn't look very much corrective. It's kind of a bit impulsive, but let's take a look here. If we just use a Fibonacci tools, I think the pullback could be around less than 50% or at most 50%. Never mind, let's just pull a Fibonacci tool here. So if we just drag this from 0 to 1, so you can see that this is roughly around 50%. So that actually fits my criteria. I actually would like to see a pullback not exceeded the 61.8%, or you can just lump it as 60%, because if the pullback is too far or too deep, like go back to 80% or even 90%, then I don't think it's valid anymore. So it could just form another range. So this is the pullback, like not more than 50% or 60%. So somewhere around there, I think that's fine. So if you go too far, go to like 80% or 70%, then I'll just ignore that, because this could be another trading range itself. So another thing in terms of the context is also important. Just take a look at this big bearish bar. So this is kind of like a capitulation bar where the supply spike, and we have seen big spread here. So this is a supply zone itself, and when you see this kind of the pullback or rally up, so it doesn't really commit above this. So this further strengthen my basis of having a bearish bias. So the second step is just keep the pullback to around 50-60%. And the third thing I have already mentioned in one of my video earlier on is definitely a confirmation. So this is the last step. So I want to see some kind of the confirmation before I enter a trade. Otherwise, we don't really know when the pullback is ending. So it is very important, especially we want to just enter the trade right after the close of the bar. Because if the bar is still evolving, let's take this as an example. So if this bearish bar is still evolving, eventually what happens if it just close higher, like forming a hammer, or someone call it a hanging man, or whatever you call this? There's a demand tail here. So what happens if it just close like that? So it doesn't really become a reversal bar. So I always want to wait for until the close of this candle, close of the bar, before I enter a trade. So the third step is always wait for a confirmation, forming as a confirmation or a reversal confirmation. So here comes my trade. So right after the close of this bearish bar, I just enter my trade. So that's based on this weakness form. I turn to bearish. Subsequently, the pullback is about 50%, so not too deep. And also it's not exceeding this supply zone. And also we see the supply increasing. So all this form the basis of taking this pullback. So, but just a recap, just wants to see first the dominating trend, subsequently the pullback not exceeding 50-60%, and third thing, we wait for the confirmation as a reversal trade. So when you have all these things in place as a filter or as the rules, then definitely you can filter out a lot of the bad trades. Sure, I'm sure that you will maybe miss some kind of the good trade as well, but do remember that we always want to increase our winning rate even if we only take less trade every day. So just pay attention to these 3 steps. So anyway, so this is my trade, and eventually I just use my trailing stop, and once it have this breakdown, so we have this big bearish bar, capitulation, spike of the supply, and then I just trailed it. So you can see that eventually I got stop out at this bullish candle, so wasn't able to catch all the way down here, but still I think it's a very good trade for me, and it's a very profitable trade. It's about real to risk ratio of 2.4, and I'm happy and satisfied. Alright, so let me just switch to the hourly time frame, and let's talk more on the current market outlook and also my trading plan together with some of the levels that I am watching. Alright, so before I just talk about my trading plan, let me give you a bit of the zoom out view or the overview of the picture. I think 4 hour could be better. Okay, so you can see that this is the 4 hour time frame, and so far I think we're still within this up channel here. So touch the channel overbought, and subsequently right at this demand line of the up channel. And if we take a look at the horizontal support, so the first level has been broken, so here comes the second level at around 34.50. So I think this is a good level, so I actually expect some kind of the bounce up from here. So if this level fail, cannot hold, then the next level I will be basing on this upsloping trading range. So somewhere around here, I think that will be around 34.20, 25, somewhere around there could be the next level to watch as well. Alright, so the immediate resistance level I think is very straightforward and clear. So this is one level close to 3500, and another level is the swing high level 3550 or 3540. Alright, so let me just go down to the hourly time frame and zoom in to the detail. Okay, so far I just pointed out the immediate support and resistance level, and I think this could be a good level to watch, 3450. And for the immediate resistance level, close to 3500, and then next level 3540. And I still believe that this downswing for the current pullback at the moment is still a test of the larger up move. So we have this large up move, climatic up move, touching the up channel overbought, and subsequently have a test going on. And I won't be surprised if it just have a deeper test at around maybe 34.20. So that's acceptable as well. So you still can go back up, bounce up, and test the all-time high level. Alright, so that's how I view the market at the moment. So in terms of the trading plan, I always trade some kind of the bounce or reversal at the key levels. So if you can just bounce somewhere around here right at the moment, then that could be long entry. Otherwise, have a deeper pullback, 34.20, just look for some kind of the reversal signal. Else, if you can just retrace and maybe test the resistance again, then that could form a short entry if we see some kind of the rejection with a spike of the supply, so things like that. So just need to monitor the context as well together with the price and volume analysis. This is the end of the video. Hope you enjoyed it. If you would like to learn more about the trading techniques to increase your win rate, just watch the video shows on the screen. And do remember to subscribe to my channel if you haven't. So I'll talk to you soon. Thanks for watching.